The simple answer is the supply of dollars expands about 7% a year, every year for the past 100 years. And what that means is that if you want to buy something that is a very scarce, desirable asset that the government can't make more of and that manufacturers can't make more of, if technology and capital and machinery and robots can't make more of it, it's scarce and desirable. Here's an example. An acre of beachfront property in Palm Beach, or a beachfront house in the Hamptons, or waterfront property in Miami Beach. That's a desirable place to live. You can't make more of it. And if you go back 100 years, you'll see that the value of that acre was $10,000. And you go forward 100 years, and that is about $10 million. And for those who are very quick at math, they'll realize that works out to 7% increase in price every year for 100 years. And that's why people buy houses for $100 million on the beach in Palm Beach. And my house, the house that I'm in right now, it was sold in 1930, and I have the deed on my wall, and it was sold for $100,000 in 1930. If you'd put that $100,000 in a vault and you kept it safe and sound for the 90 years, and if you took it out, it would pay about 8 to 12 weeks of my property tax on this house.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, Saylor breaks down how Bitcoin truly works, offering a beginner-friendly 101 on the revolutionary cryptocurrency. Let's catch up with Saylor to unravel the mysteries of Bitcoin together.
The inflation of the dollar supply means that your wealth is cut in half every 10 years if you hold all your wealth in cash. And it's the rule of 72, right? You divide 7% into 72. That's the half-life of the asset. So the half-life of your wealth is 10 years if you store it in cash. If someone gives you an asset you can invest in that goes up 7% a year, you're keeping up with inflation. You're not getting wealthier, but you're not getting poorer. You're just treading water, And if you're beating that hurdle rate, then you're getting a bit wealthier. So once you understand that, you can see that you can't preserve your wealth for long periods of time in a fiat currency. And the best fiat currency in the world, Tom, is the dollar. But in most other currencies, they inflate at 14% a year. And that means the half-life of your wealth is 5 years. But in a weak currency, like in Turkey or Syria or Iraq or Venezuela or Argentina, it used to be for 20 years, the inflation rate looks more like 28% a year or 30% a year. And we take example, the peso. The peso went from 1 peso to the dollar to 1,000 pesos to the dollar over 20 years.
Jesus.
Solana's native token Sol has faced mounting challenges, failing to sustain levels above $200 after several rejections on December 25 and December 26. This price movement mirrored a broader cryptocurrency market decline, which fell 3.5% over 2 days, ending December 27. However, Solana underperformed, dropping by 5.1%, raising concerns about its ability to maintain the $180 level amid declining on-chain activity. One critical factor contributing to this uncertainty is Solana's 30% drop in weekly decentralized application volumes. Despite ranking second with $20.9 billion in 7-day volumes, Solana fared the worst among the top 10 blockchains. Compounding this, Ethereum demonstrated more resilience, with only a 15% decline, while its Layer 2 solutions like Arbitrum and Optimism solidified its market dominance. The DApp activity on Solana painted a concerning picture. Platforms like Orca and Phoenix experienced a 39% decline, while Radium saw a 30% drop. Moreover, the performance of Solana-based memecoins, a significant driver of user engagement, also took a hit. Popular tokens like Popcat, Fiat, and Dogecoin saw declines of 42%, 40%, and 25%, respectively, over 30 days. These metrics underscore the importance of robust on-chain activity for sustaining Sol's demand. Despite these challenges, Solana's total value locked reached a 2-year high of 44 million Sol, reflecting a 16% monthly increase. This growth was driven by platforms like Binance Staked Sol and Jupiter, though other platforms such as Jido and MorganFi saw declines. This mixed performance highlights the network's need to sustain and diversify its growth to maintain investor confidence. In derivatives markets, Sol futures have shown resilience. While the annualized premium of Sol futures has fallen from 20% to 10%, it remains within the neutral to bullish range. This suggests that professional traders are not yet bearish, even as retail market sentiment showed signs of weakening with a negative funding rate on December 27, indicating reduced demand from leveraged buyers. Overall, Solana's sharp decline in on-chain activity and waning interest in memecoins present a moderately bearish outlook for Sol's short-term price. However, the derivatives market's resilience hints at optimism among institutional players, suggesting limited downside risk below $180.
Okay, so in America, you got to keep in mind you're an American. You live in the greatest country of the last 100 years. America won every war, right? We were the winner of World War I. We got richer. We were the winner of World War II. We never lost a war. We were the winners of the century. Our currency lost 99.9% of its economic power over the 100 years. But if you went to Nigeria or like Germany, the currency crashed like 2 or 3 times, right? In Japan, the currency crashed, In Russia, it crashed last time the Russian currency crashed in 98. The Brazilian currency crashed completely 25 years ago. The Argentine currency crashed about 4 times in 100 years. So if you're an Argentinian and you're 30 years old, you already know what it's like to have hyperinflation because you lived the entire cycle. It's just Americans don't. And so if you're taking advice from an American business person like Warren Buffett or Charlie Munger, well, they didn't live through the Weimar Republic. They didn't live through the collapse of the current. By the way, the currency collapsed in Venezuela. It collapsed in Argentina. It collapsed in Brazil. It collapsed in Cuba. It collapsed in Russia. It collapsed in every single country in Africa. You see? And so foreigners actually get it a bit better, right? It's like the bank's going to take your money. The currency's going to zero. The government's going to promise you it'll be okay and tell you to put your money in the bank. Then they're going to inflate the currency, freeze your bank account, crash the currency, and then tell you it's worthless. That's what happened in Cyprus not too long ago, if you want to go and Google that. And so the real promise of Bitcoin is very simple. It's a bank in cyberspace that won't steal your money. And it's an asset that you can store your life savings in that nobody can debase or corrupt. And those are 2 powerful promises for the first time in the history of the human race. No one ever gave you those 2 promises ever before now.
Dogecoin's price action has caught the attention of analysts with predictions hinting at a significant bull run. After breaching the critical $0.35 resistance level in early November, the memecoin has struggled to maintain momentum, dipping below its 50-day exponential moving average on December 19. Despite this short-term pullback, long-term projections remain optimistic. Analysts suggest that Dogecoin could surge to a conservative target between $2.35 and $2.60 by 2025, marking a potential gain of over 680%. This prediction is rooted in fractal analysis, which compares current trends to patterns from previous bull markets. Analysts highlight Dogecoin's consistent behavior in reclaiming key levels during past cycles. With the relative strength index nearing oversold territory and selling pressure showing signs of exhaustion, a rally above $0.35 could pave the way for new all-time highs. Such a move would confirm Dogecoin's resilience and potential for exponential growth in the coming years. And do not forget to subscribe to Bitcoin Saylor. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.